We are live with Phil Goldfeder from the FC, the first episode of Bourbon and BaaS.
Now, I'll admit, as I've said to you, Steve, I tend to be more of a Scotch guy myself. But when, my good friend Marty Mitchell comes over, he's now with the Association of Military Banks, brings over a bottle of bourbon, I can't resist. And shout out to Marty Mitchell for getting me into bourbon. Again, I still think Scotch is my alcohol of choice, but desperate times, desperate measures.
The rules here at Bourbon and BaaS are a little loose. They're a lot looser than they are in Kentucky. It can be booze and BaaS, but it doesn't have the same ring. So we're gonna call it Bourbon and BaaS. But Phil, what you do, this is a judgment-free zone. I just want you to know that. So yeah, I'm here for you, man. I got you. Before we get started, disclaimer to any business leaders or religious leaders: this is absolutely filmed off hours, not during the workday. So nothing to worry about there. It's all here about talking about bourbon and BaaS or banking or whatever we want to talk about.
Let me just say, I think it's so often we get wrapped up in the week and the opportunities to not just opine about what took place this week, the fintech ecosystem and the embedded finance ecosystem, but also I would argue that sometimes you get more done in the informal settings. And I used to say this when I served in the state legislature, and I don't think this is going to come to a shock to many, and I've said this many times, we got more work done in terms of collaboration after hours. I say this story all the time. I think there's stories that come out of the U.S. Senate where senators tend to get more work done early morning in the gym. It just, again, it takes a bit of the pressure off in terms of the drive towards your agenda, right? So when your guard is a bit let down, you're able to think through problems in a bit of a different way. And so the opportunity to talk to you Friday afternoons over a shared beverage, I think is exciting. I think I've been to many conferences, by the way, and I hope there's no copyright infringement. I've been to many conferences in Vegas where the theme of the after parties were BaaS and bourbon. So I don't want to say, Steve, that maybe you borrowed this from one of those, but I'm happy to be a part of it for sure.
It was an original to me. I was unaware if I've seen it before. I'll absolutely agree with you on, like, whenever you're in the office or whenever you're in public, there are the perceptions of who you need to be or what you need to be, how you conduct yourself. I think it goes back, whether it's at the gym, whether golf, like in college, and granted, I'm a terrible golfer. I heard there's more business done on a golf course than there is in the office. I think that just aligns with what you were saying as far as let's just have a real conversation and talk about what's going on. I did have to stop you because you were starting to give some really good content when we talk about what's happened this week. So there are a couple of things we can hit on. I think the goal is to do this. We'll try to do this every week. Super ecstatic about to get to talk to Phil every week and record it and share it with you.
I'm gonna hold on. Now I feel compelled. I feel compelled to say, Steve and I met in what one would argue is the ideal situation, right? We all go to conferences, we all go to events, and you hope you're going to build meaningful connections. Now, we all talk about it, but how often does it happen where you build real connections that translates into business and into collaborative work? You and I both attended, I believe it was in Texas. We attended a payments conference in Austin, Texas. And I remember sitting in the audience. I believe I was going to speak one or two speakers after you. Immediately after, and you were getting up to give a keynote speech. And I kid you not, Steve said everything that I was going to say. It was one of those keynote speeches where it wasn't just about here's how you make money and here's how you're going to succeed. It was how do you provide the best consumer access to financial services by introducing the right kind of innovation, most importantly, in a regulated in the right type of way. And I listened to Steve speak, and I remember it like it was yesterday. When I got up, I'm pretty sure I quoted you in every answer I gave to the moderator. So the moderator would ask me a question, and I literally would be like, Steve said before. And I had never met you before. As soon as I got off the stage, I think you and I sat in the back of the room, and that was it. It was the next week, you were a member of AFC, and it's been just great since then. So just really a pleasure. Again, I think from the time we met to where we are today, the constant evolutions. But the foundational principles of responsible innovation has always been that thread of how do we find new ways to work together. And through sort of everything that you've done and you've created with Ambassador and in other ways, it's really just complemented the work that we do at the American FinTech Council. And I say this on a personal level, and I say this sort of as the CEO of the American FinTech Council. It's truly appreciated to have you as a partner, to have Stacy as a partner, and to be working together as much as possible.
No, and we can't have Stacy on here because she's not drinking these days. She took a break and hasn't come back from that break. She may at some point, but right now, so this is kind of the Bourbon Brotherhood right now. But no,
I will say, as soon as Taylor sees this, she may want to join as well. Let's see how to break it up.
Yeah, we're okay. And if anyone wants to be a guest on these, shoot me a DM or Phil. We're both open to it. But I would be remiss if I did not say, Phil, it's been an absolute pleasure. And there are very few times in life where you meet somebody that you have that instant connection with, and it just grows from there. And so thank you for being a part of my life, and thank you for joining me on here. I'm not effusive as you, so I'm not going to go into it further. But cheers, my friend, my brother.
Cheers.
All right. Yes, you first.
So again, there is not a week that goes by, whether it's in Washington, D.C., whether it's in states all across the country. Our team is literally scouring the United States and starting to span international, keeping an eye on regulatory oversight, on new legislative proposals, on new ideas, whether it's related to fintech lending and potential usury caps as it relates to fintech lenders, whether it's proposed DMCA opt-outs, which hurt banks, state chartered banks, and banks that are partnering with fintechs in the lending space, whether it's earned wage access or remittance taxes that you've seen more and more pop up all across, or in Washington, D.C., whether it relates to bank modernization, access to payment rails, right? Bank charters, a new OCC bank charters for fintech companies. There is not a week that goes by where there is not something that we're digging in on. And obviously always happy to come here and speak to some of the latest proposals. I think you and I talked about this sort of when the first proposed, I think it was 10% interest rate on credit cards that sort of the president had pushed out. And all of a sudden it was like, we should get on and talk about this and what that would potentially mean. I would say, again, like I said, there's not a week that goes by, particularly in the current administration, where there's not a new proposal or new activities taking place.
Do you want to dive into the current administration, or do you want to keep it to banking?
No, look, I'll say this. I have nothing but positive words for the current regulatory leadership. And I say this as, I would say, leaders who have almost become friends at this point. Our relationships with the OCC and Controller Gould, or with Chairman Hill, or folks over at Treasury, or even Jeff over at the CFPB, who's been leading a lot of the work. We've had tremendous relationships in our ability not to deregulate. I want to be clear about something, because there's this theme that this administration is all about deregulation. I would say it's quite the opposite. It's not about deregulation. It's about understanding the nuances of the risk and the regulatory challenges, and actually solving for those problems, versus blanketly shutting the door on any and all innovative activities, which we saw, I think, under previous leadership. And like I said, Controller Gould and Chairman Hill have been a breath of fresh air, not in a sense of deregulation, not at all, in a sense of smarter oversight and pragmatic regulation.
Yeah, and regulation is not going anywhere. Are there more consent? Were there more consent orders? Were there more actions in previous administration? Yeah. But there's still going to be a 5-year look back. There's still going to be like this obligation. The OCC released their consent orders this last week, and there weren't any new ones around, maybe with some AML. It wasn't BaaS related, but it doesn't mean that you can do sponsorship and not have they just do any. That's not an option.
Agreed. It's about protecting consumers and assessing real risk, right? What is the potential risk? And quite frankly, I think we've done a better job over the last 12, 15 months than we did in the many years before that. Huge credit to sort of agency leadership. And again, it's not without its challenges, right? And not without, unfortunately, without bad actors who are going to do bad things, right? But that is not an indicator of the wider embedded finance, innovative bank ecosystem. And that's what we stand for and what we're trying to advocate for.
So along the same line, like I'm going to jump, but it's still tangential. I get there. This year, we've seen more new charters granted than we've seen the past many years combined. But part of that. And then this week we saw the PACE Act, which you started on. And I stopped you because I wanted to capture it on tape. And you can explain what tape is to kids so they understand it. But no, we talk about regulations. We talk about examiners coming in. We talk about these things. And now these like fintechs are getting charters. It's not easy to have a charter. And that's what, if you're a tech company, great. You're great at ones and zeros. But are you good at delivering around the guidelines the government requires to be responsible financially? And sorry, my dog is seeing someone else.
No, in the new world of Zoom and these recordings, I think people have almost come accustomed to a kid walking in the room, a dog barking. I love that you said that, by the way, and I will tell everybody, we didn't plan that. I love that you said that because I've been thinking about it at the same time. I've been thinking about that a lot recently, is that a charter is not the answer to everyone's problems, right? The idea that all of a sudden you're going to become a bank, if you go into it not truly understanding what that means, you're likely not going to succeed. And I recently heard it, and I wish I can give credit to who I heard it from, but I was listening to a podcast and said it's unfortunate there are those who are stepping into this space now who are going to be the regulatory problems in 2, 3, 4, 5 years from now. And anybody who is stepping into it, number one, needs to know what they're getting into. And number two, needs to understand the requirements. And so I'll use an example, and huge credit to one of our members, a company, Mercury. Their chief banking officer got up at a conference, I think a conference that you and I were both at not too long ago, and said, we recognize the great colossal responsibility that comes with getting a bank charter, and we take that responsibility to regulatory, to compliance, as serious as anything else we do, and we're committed to ensuring we do it the right way. That's the right message. That's the right way to approach it. And I think in the interest of, everybody's doing it, we should do this. And it's you almost go back to where we started. And again, conversation around BaaS and Bourbon, we should really rewind maybe 10 years and look back to where the concept of banking as a service and embedded finance started, and this sort of rush to get it done. Like all of a sudden, every bank was like, oh my God, we've got to get into this. Let's do it. And they moved too quickly. And I don't have to tell you, they broke a lot of things. We saw, unfortunately, bad actors in the fintech space. You saw software companies like Synapse, who literally nefariously duped a lot of trusting financial institutions and just sort of buying into the concept of embedded finance, and that their software was all the answers and they were going to do everything. And unfortunately, we saw the consequences of that. I think to this day, we're still seeing the consequences of the bad actors who stepped in. And quite frankly, as banks have a responsibility to protect the integrity of the financial institution and to the financial structure. We can never forget that. And so that doesn't mean if you've been around for 100 years or if you're brand new, you have a responsibility to protect the banking infrastructure, and you have to take that responsibility seriously. And I give companies like Mercury and Upstart and those who are going into it with the right mind all the credit in the world. I'm afraid, I think you and I both know this, and we talk about this all the time, like I'm afraid of the damage that can be done by the bad actors just trying to churn a quick buck, as they say.
So I have an analogy I just thought of, and it's maybe really bad, but I'm going to use it anyways, and then a couple of follow-ups. But I think it's almost like that kid in high school that does really well because the parents are there, and the bank's making sure that fintech is compliant, just like the parent makes sure that kid is performing in high school. And they go to college, they got their own charter, but then they don't perform well because they don't have that oversight. Sometimes it is beneficial to have that oversight, and not that we want to be parents forever. Dear God, please help me. But I love it.
Yeah,
like, it's not dissimilar that like these fintechs. Oh, how hard can it be? But then there are a lot of guardrails that like they may not realize are there, and there's a lot more to having a charter than just getting that government approval to have it.
That's correct. I'll say two things that I want to say to that is you're seeing a lot of maturity amongst traditional fintech companies. You're seeing more chief compliance officers within fintech companies that historically didn't exist, right? There were people who understood compliance, but today I think fintech companies that want to partner with banks, you're seeing a large compliance team. I mean, I had a fintech company say to me yesterday during a podcast that they would put their compliance department on par with any bank in the country. And I was, again, I'm sure that comes at a tremendous cost, by the way, but they're looking at the long game. They're saying, hey, if we build a solid foundation, the long game is much more sound and secure and foundationally solid. I think those who don't embrace that, I think, are in trouble. And that's why you're seeing a lot more of the fintech companies understand it. So to that end, those fintech companies that do, in theory, are more prepared to become a bank if they see that as a potential pathway forward to better serve their consumers, do various things. But again, you have to go in eyes wide open.
No, for sure. And just to give a quick plug for myself and the AFC, I'm going to record a podcast coming up. So stay tuned. We're going to break down all the charters. Ian from the AFC is going to be on. We got some other folks. There'll be some really insightful as far as what types of charters there are. These grants, just because they've been given a charter, there's still this whole, they have to pass that check before they're able to open. They're doing a pre-exam almost to make sure that these fintechs are operating. So more to come on that from me, from the AFC. Excited about that. Also, AFC Executive Summit, I believe there's going to be a breakout session on the charters, the fintechs. So excited to be in Chicago for that in July, I believe.
In June. In June.
Yeah.
And we're going to be breaking down, I think, again, as people have become accustomed over the last few years, as we've done some of these events, the hottest topics in terms of real pragmatic takeaways, digital assets, AI in banking. We've compiled just a really great lineup for our membership and our executive leadership on the fintech side and on the innovative bank side. So a lot going on. This, like I said, there's not a week goes by, and we're doing our best to not only stay on top of it, to ensure that our members are informed.
Yeah. So want to be cognizant of time because we only have a few more minutes left. This week, the PACE Act. Phil, is it true or false that anyone can get access to a Fed payment line?
Well, not today, as you mentioned, the PACE Act. It's a proposed legislative language and a proposed legislative bill. You know, it's interesting because oftentimes, as the American FinTech Council, there's a presumption that we're going to take certain positions given our name and what we stand for. But it's important to note that a large percentage, more than 25% of our current membership, is made up by banks. And the question is, are we creating an unfair sort of competition in ways that we're providing access to certain things? And this conversation started a long time ago. It goes back to when Tom Curry, who was the controller of the currency back in the Obama administration in late 2015, who had proposed the concept of a fintech charter, when giving fintechs the opportunity to get their own unique type of charter. And again, without going into the details of what the ins and outs, and again, the AFC didn't exist back then, but the concept and the theories stayed the same, in that as long as there's no workarounds and no one has an easier time. The idea is that creating a level playing field, right? Competition is not bad. We encourage it. We say this all the time. Fintechs create competition, all right? And you talk about it specifically as it relates to open banking. You want to create the best products for consumers, and you do that by creating competition. But that doesn't mean giving any one entity an unfair advantage. And again, for us, we always look at every proposal when it's access. I know that Governor Waller had talked about skinny charters at one point a few months ago. And we always look at these in totality to say, number one, what are the use cases and who in theory would take advantage? Number two, are the consumers going to benefit? Is there a huge consumer upside? But most importantly, number three, are the guardrails in place, and are we creating a level playing field so there's equal opportunity for those engaged in the ecosystem? And to us, that's the most important thing. It goes back to what we were just talking about, bank charters, right? It's not just because you are not a traditional quote unquote bank doesn't mean that you get to do things that banks don't. Once you have determined you're going to become a bank, now you have to follow the same rules and regulations that every other bank follows. And we say this about our bank fintech partnerships. The fintech companies that work with banks today, they have to follow the same rules and regulations that are currently on the books for the banks. Nothing has changed just because you're a fintech company, right? There's ultimately responsible companies, responsible banks, responsible fintech companies care about consumer protection, about building a solid foundation for the future of finance. What we create today, and see, this is what I love. What we're building today is going to be the regulation in 50 years from now. What I mean by that is what we call fintech companies today in 10 years are just going to be called banks, right? Or banks are going to be called fintech. I don't know which name is going to win out.
Yeah,
it's going to be going to be synonymous with each other, and there's going to be no differences, because ultimately it's about providing financial services to consumers in the safest possible way.
Yeah, absolutely. No, you're spot on. I don't know that the base regulation, I think there'll be a lot of lobbyists that come against it, and I don't see it passing, but it brings that question, like it's something that people need to be cognizant about, and it's not dissimilar from all the charters that have came around. And at the risk of, I want to just repeat myself, but there are opportunities for people to have more access to the financial system. But with that responsibility, like there is a responsibility that comes with that. And I'm not going to criticize.
No, and it's something I know that you and Ian, I know you've got a great lineup for next week, are going to be discussing in much deeper, with a much deeper dive on sort of the nuances between the various proposals and various opportunities for fintech companies. Look, here's what I'll say. I'm optimistic. I'm optimistic because I think we have today a more mature fintech embedded finance ecosystem, right? And I think the maturity combined with the opportunities will create sort of good, sound, secure competition, which will lead to safer, more affordable optionalities in financial services for consumers. So I think we're moving in the right direction. Like I said, I think the current regulatory leadership has done a great job. But I'm excited for the continuing evolution and seeing sort of which banks are going to get into the space, and how, and who they're going to partner with, and how it's going to work. And today, the American FinTech Council has over 150 members and partners, and still growing. And so just excited for the growing ecosystem of responsible providers.
Yeah, absolutely. I'm optimistic as well about the direction we're going. I'm also optimistic about the next episode of Bourbon and BaaS. Are you sure you want to do this weekly and not do the next on Monday? We wait till Friday.
No, I think this is safe. And again, I've got a selection of bourbons. I just said I have a selection of BaaSes. Again, I'm thankful to a lot of our membership that's in Kentucky. I mentioned Marty Mitchell, our great friends over at Emprise Bank, sent over something that maybe we'll save for a future episode. But again, a lot of bourbon to get through, and certainly a lot of content.
Absolutely, for sure. Phil, thank you again for joining me. Feel free to reach out to Phil or I on LinkedIn. We're going to Innovate Spring in a week and a half or so. If you want to be a guest, if there's topics you want to cover, let us know. Thank you, Phil. Can't wait for next time.
Thanks so much, Steve.